Alphabet stock has been rallying recently, and much of the momentum has come from its strength in its AI and cloud businesses. Cloud revenue grew more than 30% last quarter, helped by rapid adoption of its Gemini AI model and progress with its custom chips. And investors are seeing this as Alphabet closing the gap with competitors in high growth areas like cloud infrastructure and generative AI. There are risks too, however. Alphabet still faces regulatory scrutiny. There's competition from Microsoft and Amazon, and emerging AI players is very intense in this area. And scaling AI infrastructure can be very costly too. So there are certainly risks with this recent rally. Seasonally is a really interesting period. Look at this period from September into early October. You can see there tends to be a fall of around 1% on average between the 18th of September and the 2nd of October. But that turns around in early October through to early November. You can see that if you just take it a little bit later and sort of get this strong seasonal pattern here, you can see that the average return is over 6% in this period from 10th of October through to the 8th of November with a 75% winning trade percentage. So it could be worth investing in any dip that we get into early October from a seasonal perspective. And if you look at Google Alphabet stock, technically we've got this runaway gap here around the 225 region, and we've got this rising window here about the 245. Both areas would provide decent support, and should price move into that area, it would be a very attractive place for buyers. Stocks could be placed very tightly just underneath these respective gaps, looking for a potential bounce. Remember, don't just trade it, Seasonax it. Sign up here at Seasonax where you can get access to literally thousands more financial instruments and see their seasonal patterns.